Hello and welcome back. My name is AJ, one of the hosts here at the Satoshi Society YouTube channel. So I want to get straight into this video because a couple really interesting things have just happened. First, we had the flipping between the dollar and the euro. And the last time this happened was 20 years ago. That was the last time that the dollar was stronger than the euro, because after 2002, the dollar gradually became weaker and weaker until now. So in today's video, I want to explain why this is happening, especially because the dollar is about to potentially get stronger. And then I want to show you a really cool piece of data that compares how the stock market did in relation to Bitcoin's price and the strength of the dollar. And I quickly want to answer one of the most asked questions in Bitcoin's history, which is what is the true value of Bitcoin? And I know it's hard to figure out what the true value of something is, but in Bitcoin's case, one of the ways to measure its true price is to look at how much it costs to create a Bitcoin, aka mine it out of a block, because ideally you want to be buying it when it's closest to its true cost of production to get its true value. And as of a few days ago, JP Morgan did in fact publish a report saying that today the cost to create a Bitcoin is roughly $13,000. Now what this tells us is that if we do see the price come down to those levels, around $13,000, then this will hurt the most important players in all of Bitcoin, which are the miners. So the lower the cost to make a Bitcoin, the better, because it means the miners won't need to sell as much Bitcoin to pay for the electricity that they are using to mine that Bitcoin. But yeah, that's, my quick answer to that question. But let's get straight on into the main topic of today's video. So here is something important to remember. Last month, on the 13th of June, the SP 500 went into a bear market where it lost 20% year to date. Now here is a fun fact. Over the last 65 years, dating back to October 21st, 1957, we have had a total of 12 bear markets. Now over that time, on average, 1 month after the bear market, the stock market has recovered 2.9%. But that's just 1 month later. 3 months later, on the other hand, the stock market median has been up 5.7%. Then 6 months later, the stock market was up 5.5%. And then 1 year later, the stock market was up 23.9%. So what this data is telling us is that after the stock market drops 20% or more, typically 12 months later, the stock market tends to recover, which as of right now, we have only seen 1 month of. However, this has not always been the case because, for example, in 1973, we had the stock market still down 26.9%, 12 months after the bear market. And it didn't even recover to the pre-crash until 6 years later. But that's also because the 70s was a pretty crazy time. There was a war going on, an oil embargo on the US, and the currency crisis, which was the end of the Bretton Woods Agreement, where the US got out of the gold standard, which started the devaluation of the dollar. The second time when the market didn't recover 12 months after a bear market was March the 12th, 2001, when the market was down 1.2%, mostly due to overinflated tech stocks and earnings just not really being very good. And then the third time the stock market did not recover a year after that 20% drop was in 2008. And we all know what happens there with the global financial crisis and the collapse of real estate when the market took 17 months to recover. So what this all tells me is that the market typically does recover a year after a bear market, as long as the thing that is doing the crashing is not a global event of uncertainty or the collapse of a currency. Now let's get on to what you've all been waiting for, which is the direct link between the strength of the dollar and how well the SP 500 and Bitcoin does. So believe it or not, the stock market and the dollar can actually correlate. Now the DXY, if you didn't already know, is what is used to measure the strength of the dollar. Now the DXY index is measured against 6 other currencies around the world in something what is called trading pairs. Now there are 6 trading pairs, and they are the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. The percentage points that you can see next to them depend on the weight of impact relative to the index, which is why all the percentages are slightly different. So as these currencies go down in value, the value of the dollar, or the DXY, goes up. Now the DXY is currently at 106.35 and reached highs of 109. And the last time it was this high was back in 2002. And now, this is mostly down to the fact that Jerome Powell has basically said to the world, come give us your money. We are going to pay you the highest interest rate, and our economy is strong, and we have the world's reserve currency. That is sort of why the DXY is doing so well at the moment. So hopefully that's given you an understanding of the DXY. But now let's get into the exciting stuff by sharing with you one of the most interesting bits of data I've been able to find, which compares how well the stock market and Bitcoin do in relation to the strength of the US dollar. So a big thanks to Trading Shot on TradingView for creating this chart for us. Now, it may look very confusing at first, but I'm here to break it down for you. Now, all this chart is doing is looking at Bitcoin's price, the stock market's price, and the strength of the US dollar over the last 10 years. That's it, so here it is. Now, the blue line here represents the stock market's SP 500. The green line represents the DXY, and the orange line represents Bitcoin and Bitcoin's price. So the chart is broken down into 3 different sections: the rising phase in green, the falling phase in red, and the accumulation phase in yellow, other known as the consolidation phase. Now here is where it gets interesting. Let's compare all the same color phases to each other, starting with the greens when Bitcoin is up, and pay close attention to the DXY's influence. So in the first section here, you can see as the dollar is down, the stock market is up and Bitcoin is up. In the next green section, the dollar is consolidating, or in other words, moving sideways. The stock market is up and Bitcoin is still up. In the next green section, the third green section, the same exact thing is happening. The dollar moves sideways, the stock market is up, and Bitcoin is up as well. And in the last section, as the dollar drops, the stock market goes up and Bitcoin goes up as well. So far, what the data is telling us is that when the dollar is consolidating, moving sideways, or is decreasing in value, then the stock market and Bitcoin reacts positively to this. So when the dollar goes down, this is very, very good for the stock market and Bitcoin. Now let's compare the red sections to each other. This is when Bitcoin is going down, and again, pay close attention to the DXY's influence. So the first red section, when the dollar went up, the stock market went down and Bitcoin went down. The second red section, when the dollar went up, the stock market moved sideways and Bitcoin went down. Then in the third red section, the same thing happens. The dollar went up, the stock market moved sideways, and Bitcoin went down. So this tells us that the market does not like a strong dollar. Now let's look at the last phase, which is the yellow phase. This is when Bitcoin does pretty much nothing, but again, pay close attention to the DXY's influence. So in the first yellow section, the dollar is moving sideways and the stock market is going up and Bitcoin does nothing. The second yellow section, the dollar is moving sideways, the stock market goes down and Bitcoin does nothing. And the third section, the dollar is moving sideways, the stock market is up and Bitcoin again does nothing. Then the final section, the dollar goes up and the stock market is up, which is a surprise, but again, Bitcoin is still doing nothing. So let me break this all down for you in the simplest way. When the dollar was up, there has never been a time when Bitcoin was also up. That's also true for the stock market, at least in the last 10 years. As well, when the dollar was up, there was never a time when the stock market was also up, other than that one time in 2021 when the government flooded the economy with money. And you could argue if we didn't have all that free money, then the stock market may have never been up at all. So if we apply this chart to what the strength of the dollar is right now, the price of the SP500 is right now, and the price of Bitcoin right now, then we can see that, this chart still works. You can see that the dollar is stronger, up to 108, 109, putting us right here, which tells us that the stock market should either be moving sideways or should be down. And as you can see, the stock market is down, which also indicates to us that because the dollar is up and the stock market is down, the likelihood of it is that Bitcoin is also going to be down. And sure enough, Bitcoin is down, as we all know it. And this confirms to us that we are in that red phase. We have printed another red phase, and that's what we are in as of right now. And typically what happens after a red phase is the yellow phase, otherwise known as the consolidation phase. So until we see the dollar pull back, the price of Bitcoin is going to stay down. But once we start to see the DXY consolidate, we can then confirm that we are in the yellow phase, where we want to be filling our bags, accumulating as much crypto as possible, getting ready for that green phase, which is where we see the stock market and Bitcoin pump massively. So I really hope this video has given you a great understanding of the correlation between the DXY, the S&P 500 and Bitcoin, and I will be keeping you updated on this as well, as we transition into that yellow phase and then into the green phase. Once we are confirmed that we are in that yellow phase, personally for me, that's where I'm going to be accumulating the majority of my crypto, mainly sort of Bitcoin and Ethereum, until we move into sort of that green phase, where I'll sort of spread my portfolio out a little bit more to see those bigger returns. So again, I really hope you've enjoyed this video. Make sure you smash a like on this video if it did help you out and you did enjoy it, and make sure to subscribe if you are new to the channel. Thank you very much for watching. I will see you in the next video.